Okay, we have set up our dashboard. We've had a quick run through of the 3 financial reports. Now we need to build out our profit and loss to show us the information that we really need. And once we've built our profit and loss and adjusted our chart of accounts, we won't have to do this again. So I see this very often, and I really want to nip it in the bud straight away. So get your Xero open, log in, do your 2-factor authentication. That will be the death of me because it doesn't remember the computer for 30 days. But jump in and let's optimize your profit and loss. Let's build it out the way it needs to be so that we can see the information that we need, so that when we start to produce financial reports, we are actually tracking the right thing. So we're going to accounting and we're going to select our profit and loss. And I'm going to run through what we need to change, and then I'm going to show you exactly how to change it as well. So for the purpose of this example, what we really want to achieve is to get our cost of sales to reflect, or our COGS, cost of goods sold, to reflect our materials and also our billable wages, so that we can track our gross profit, so that we can problem solve or troubleshoot any profitability issues. So what we need to do here is we need to fiddle with our chart of accounts, which are these individual lines down here. And what we're going to do is we're going to bring wages and salaries up into our cost of goods sold, our cost of sales. And I don't have a super line in here, but you will probably have a super line if you've been doing payroll already. And I want you to follow the same process for it, bringing that superannuation up into the cost of sales as well. So from here, what we are going to do is, and I'm just checking to see if we have a materials. We don't have a materials line item, which is great. I'm actually going to change the name of purchases to materials, and then I'm going to bring wages and salaries up. So we're going to select accounting. We're going to go down to the advanced section and go chart of accounts. And we're going to adjust some of these charts, a couple of these chart of accounts. So we can see the full list here, but what we're going to firstly do is change purchases. We have purchases here. I'm going to change the title of this to materials, but we can see that purchases is select as a direct cost, which is correct. It's put in our cost of sales as a direct cost, but it's a little bit too vague saying purchases, because technically every expense is a purchase. But what we want to do here is we want to call this materials, so that we know that this is exactly our materials line item. And for the description, you can put in whatever description you like. You can title these whatever you like. I think materials is the best title for this account. And it says here as a description, goods purchase with the intention of selling these to customers. So we could change this from goods purchase to materials and supplies purchased with the intention of selling these to customers. That makes sense. Excellent. And we have GST on expenses, correct. We want to claim GST on those expenses. We don't have to fiddle with the rest of these. We can select save on that. And I'm going to jump straight back to, because that saves automatically. Once it hits saves, we don't need to refresh anything. We're going to go straight back to our profit and loss from accounting to P&L. And we can see that purchases has now turned to materials. Now, we are also going to bring our wages and salaries up into our cost of sales by a very similar process. We're going to go back to our chart of accounts. We are going to search for wages, pardon me, and we can see here there's a couple wages line items. Now, some of them are locked, so wage payables, they end up, and we can see how they say current liability. Liability refers to balance sheet. We're not going to fiddle with those. We're just going to fiddle with 477 wages and salaries. And we can actually title this wages and salaries billable. For the purpose of simplicity, I'm going to call it billable, and I'm going to move all of the wages and salaries up to cost of sales. You can add a layer of complexity, which I'll go through in a different video, about splitting up our billable wages versus our non-billable wages. But for the purpose of this, I want to keep it nice and straightforward. So we've adjusted the title to wages and salaries billable, and we're going to change the account type from expenses, and we can see expenses sit down here in our operating expenses. We're going to change it to a direct cost, so it sits above our gross profit in our cost of sales. So we select from the drop down, we go down, find expenses. We're going to select direct cost instead of a normal expense. And we can go, we see here payment to employees. This is the description, payment to employees in exchange for their resources. So let's call it payment to billable employees. GST on expenses, correct. Let's hit save. And we go back to our profit and loss, and I will show you exactly why we do this in just a moment. So we now have our materials and our billable wages in our cost of sales. And what we can do here is we can select from the More tab, our percentage of trading income, and select update. And now we can see our gross profit percentage. And we can see that our gross profit percentage here is 57.22%. And what I would like us to do, and I'd like you to do this as well, is just have a little look at comparing with last month. So we can see current month versus last month. Is there a trend following in our gross profit, or is there an issue here with our gross profit? We can see in this example, there were no materials in December, which is kind of concerning. However, we only did $13,000 of sales in December, which is also very concerning. So by having a look, we don't need to go into any of our other expenses. We can identify straight away that under our gross profit, January is operating reasonably well. However, December, there were some issues because revenue was too low and we also didn't have any materials. Now, there's going to be periods where we don't have any materials expenses, depending on the nature of what you do. But what we have seen here is that there is not necessarily, and looking at December, there is not necessarily a profitability issue here. There is a revenue issue here that our cost of wages exceeded our amount of invoices sent, and we need to, in order for us to have performed well in December, we would have most likely needed to invoice out, let's say, circa $30,000. So this is a great opportunity for us to see live how our gross profit is a really important figure to track, because we can troubleshoot straight away without having to worry about, oh, I shouldn't have purchased this, I shouldn't have purchased that. It's irrelevant because gross profit is the issue here, and we've identified that revenue was the driving force behind there. We've been able to problem solve straight away. So I hope this gives you a really good understanding about how to set up your Xero accounts. I'm just going to quickly turn off percentage of trading income to make this a little bit easier on the eye. And we're going to quickly see if there's anything else that we could change. We don't need to move anything else up there. There is a question that would sit around advertising. Now, if you are a company that relies solely on advertising to create your sales, let's say you do Facebook ads to a lead form in order for you to win the job. Let's say you do external structures and you didn't get really any word of mouth work. Everything comes from lead generation. There would be a question here to say, should we put our advertising expense up into our cost of sales? But for the purpose of the scenario that we've gone through, I'm going to say no, not yet. Let's not add that layer of complexity. Let's keep in mind the fact that we want to see just our materials and just our cost of our billable staff in our cost of sales, so that we can problem solve whether our materials are too high, whether our efficiency is too low, or whether potentially there's a pricing issue or a revenue generation issue there. So let's keep it super simple. Let's only add layers of complexity when we need to, but I want you to go out now and adjust your profit and loss to reflect this so that we can see our gross profit and start to understand what that means.